Seshadri's Talk Show. Seshadri's Talk Show.
Morning, good afternoon, and good evening, ladies and gentlemen, and my fellow seekers of wisdom. Welcome to another exciting episode of Seshadri's Talk Show, where we dive deep into the minds of industry experts to explore the diverse facets of their careers and passions. I'm your host, Sridhar Seshadri, and today we have an extraordinary guest with us, Dr. Kishore Nuthalapati. He's CFO of Beckham Infra Projects Private Limited. He is a corporate finance professional, economist, and a true polymath with a PhD in finance, a company secretary, and a slew of postgraduate degrees with top university rankings. With 25 years of experience spanning from finance, banking, project management, and more, Dr. Kishore has not only excelled in the corporate world, but has also made significant contributions to policymaking and financial literacy. Dr. Kishore is a mentor to startups, an advocate for financial literacy, and a multi-talented individual whose expertise touches various domains from venture capital to project structuring and from economics to being a published author. In today's episode, we will explore Dr. Kishore's insights across the spectrum of topics aligning with our podcast segments. So without further ado, let us jump into our first segment, business and entrepreneurship. Dr. Kishore, your extensive career spans diverse fields like finance, project management, and law. How do you believe this multifaceted expertise has shaped your entrepreneurial mindset? And what advice can you offer to budding entrepreneurs looking to make their mark in today's competitive business landscape?
I think this is a good and starting question. And it also challenges to remember and to remind all of the past experiences that I have and how my knowledge journey has been all through these 25 years. Now, if I could equate the functions with, say, persons or positions or roles, finance, project management, and law, all the three areas which are closer to my heart, I have been doing the works and I had some experiences in each of these fields. I realized that this as a set is set for me. 1, finance, 2, project management, 3, law. And there's a good interrelationship between these three. So finance is the king. Of course, I may have said it dramatically, but in true sense also, finance is the king. Then project management is more like an elder brother. Elder brother needs to do anything cautiously, carefully, do it cautiously, carefully, and then take the assistance of others who are available. And coming to the law is like an uncle, Aunt Jane, someone who would caution whenever we tread into a new thing and then would provide for a proviso which will help us should there be some risk or any backup required for our subsequent steps. That has given me a fantastic package of positioning myself as always as a good CFO in the corporate field, and I claim myself as corporate finance professional, which I feel is an equivalent word of a CFO, sometimes better, all through remaining myself as an economist. The way you have asked, so how it made me learn many things, how it shaped my mainstream career, how I'm able to mentor, assist, understand, and sympathize or have empathy for the startups, for their problems, or for their day-to-day functional requirements is all because of this social entrepreneurship aspiration, journey, and efforts. Now, my mindset is more from mentoring, supporting, maybe traveling with the startups wherever possible, whenever possible. Also, taking part in small steps of investments. I'm not a big investor, but in a small way, wherever possible, I do make some investment. And touch wood, except 1 or 2, most of the investments what I made have given me good returns, satisfactory returns, I should say. And that is the success of the combination of mentoring, supporting, and also being a social entrepreneur myself. You've asked me, how are you mentoring or what offers, what advices would you give to the entrepreneurs, etc., and how are they making a mark in today's business landscape, the competitive landscape? What I would suggest, out of my long experience of having interacted with hundreds of startups, MSMEs, solo entrepreneurs, self-employment created businesses, what I found is one needs to have a solid business concept. If she doesn't have a solid business concept, how much of a good he is, the business will have a very short life. And the business concept need to have a bit of uniqueness and innovativeness. It can be a simple adoption, emulation, or maybe even copying also, so long as it is serving some unserved areas. It could be geography, it could be time, it could be recipe, it could be any of these things. So long as there is some uniqueness, some innovativeness, and additional trait which comes with your passion to be in that business, in that venture, in that service, that will definitely disrupt. And the disruption should be with features, and it should also have inbuilt natural competitiveness. It should not be something where you subsidize and therefore it looks attractive, impressive, and therefore people come and onboard you as a customer client. It should not be like that. It should have natural competitiveness. You should not subsidize the service, expecting footfalls, expecting onboarding clients, and then figuring out how to make it a profitable venture subsequently. That is not a right model of disrupting the existing market. You have to disrupt with features. What features? The same what we spoke a while before: concept, uniqueness, innovativeness, and the passion with which you do the venture. Then your concept should be properly tested. Initially, preferably initially self and family funded. If you do not have confidence in your venture, and if you do not fund your venture yourself, and if family is not betting on you, I'm sure others do not have a reason to bet on you. How much ever good the concept is, how much ever impressive the way you explain it. So you have to fund it initially. That is what makes a startup or entrepreneur an entrepreneur. Not every new business is a startup. Not every businessman is an entrepreneur. And these are axiomatic. Everyone knew how they should be differently understood than as one concept or synonyms. They may sound like synonyms, but they are not. They are different concepts. It is the entrepreneur who commands great respect for whatever he is, than a businessman or a simple startup. Startup could become an entrepreneur, businessman could become an entrepreneur, but the other way around is generally not. Therefore, the entrepreneur is one who will have a properly tested, solid model, where possible funds himself. Next, family funds it. And then the most important thing, assuming there is no external funding at all, no funding at all from external sources, the business, the venture should survive, albeit operating at a smaller scale. It should survive financially, operationally, and with great dignity. That is a real startup, real venture, real entrepreneurial spirit. So long as an enterprise is with these features, that is set to meet with great success, and funding follows very automatically. You just need to put efforts in letting the investors understand what you're doing, explain them what you need, and explain how you would build value for them as well, while building value for yourself, your family, and your stakeholders. I think funding will follow that way. Do not make crazy pivots. Just because within 6 months, 1 year, you did not meet with grand success, great success, exciting success, do not change your business model. Those kind of pivots reduce the stature of the business. They could dent the credibility what you have for yourself, for the venture, and with your prospective investors, or even among your family members or your well-wishers. So Pivot has to be an exceptional thing, should not be the rule. Then build good trust, maintain transparency, have eye for detail, build and demonstrate the eligibility for yourself, for your venture, to get funding, to get support, to get mentoring. And then you are set to scale up, which will be natural course of progression for yourself and for the venture, what you are nurturing as your startup. I think this explains how a startup can remain competitive in the business landscape while there is huge competition for every startup. And of course, the support or the advices or the mentoring what I am able to give, small and humble way, is all because of my entry and my persistent learning process of finance, project management, and law.
Great, Dr. Kishore. All of these are like absolutely gold nuggets, very valuable for entrepreneurs. I would request all the entrepreneurs who are listening to this to take all of these points very seriously. And my piece of advice is they should reach out to you, Dr. Kishore, for getting you on board as one of the mentors on their startup. But definitely, this is very thorough and very, very useful for all the entrepreneurs. Amazing. Great. So I'll move to the next section, Dr. Kishore.
Yeah.
This is about health and wellness. Everybody has a different way of looking at like work-life balance. So my question is this to you, like maintaining a healthy work-life balance is essential in high-stress industries. When it comes to finance, I know for sure it is a high-stress industry. So with your demanding career, how do you manage to prioritize health and wellness? I mean, like, could you share some practical tips for our listeners who aspire to achieve a similar balance in their lives?
Personally, I believe the balance in work and life, while is very important, not so easy, and may not be perfectly possible to, because one has to see a trade-off between these two. So it's not exactly balanced. There could be a tilt, one side or the other, a tilt. And how is that steeping or what is the slope would depend from person to person, depending upon his, her requirements, preferences, the responsibilities, and many other things. But for sure, if one has passion, the balance could be fairly reasonable. It would be reasonable. It will not have extreme tilt towards any one of the directions. It also has an example for that. It's not that you can drive extremely fast where traffic is heavy and you drive slow where there is no traffic. So that explains us that we can take advantage of whatever possibilities exist within our given life and work and carve out some pieces for the other part, so that you not meddle with both in a bad way or you not mix them badly. But you cannot today avoid thinking about the work at home if the work has got pressure for the following day. It is reality. How much ever I tell that keep all the thoughts in a rack in your office and walk out, and then don't have any of those thoughts until you reach home. Think of yourself. As you reach home, think of your family. This is an ideal situation. If that could happen for everyone, the world will be like what we're talking, Finland, the countries which are the most happiest places. Everything would be like that or better than that. But it is not possible for everyone. It is seldom possible because pressures from that to this side, this to that side, do cross borders very, very often. How much do we control to minimize these things from stepping into the other zone is the challenge one we have to achieve. This question, as I said, is very sensitive. When we are talking about each person individually about work and life balance, it is not about the person. It is about a big family which is dependent on her, on him, and it is his emotions attached, deeply entrenched with his family. So we aren't talking about one person, we're talking about a family. And all families put together, we're talking about a country, talking about the world. Therefore, possible, reasonable work-life balance is very important, but it may not be perfectly possible for everyone. To the extent possible, we should avail of it in our own interest. So long as we can achieve some balance between work and life, we will be able to work longer. In fact, it's not that you're working for work's sake. You're working for life. Of course, with the passion that your work has to stand out.
I think that's a great takeaway. Amazing. Thank you. So, Dr. Kishore, we'll move to the next question now. I see technology is one big piece that everybody is heavily leaning on, and technology is a pivotal thing in as of today's modern finance, project management, law. So, from your vantage point, uh, which emerging tech trends do you see are going to make the most significant impact?
Technology did change lives of everyone. Coming to finance, in my personal view, has already seen great disruption, advancements, and in fact, a change because of technology. It starts with many things, in fact. The list is very long. If I have to tell RTGS, NEFT, there are many things which have come into the course of finance function, each of which is a technological disruption. Back then, if I need to understand what is my bank balance, we ought to wait at least 3 to 6 days time to get the entries entered and then to be tallied, and then the teller has to be there to tell, yes, this is your balance. Today, as you make a payment, next moment, along with the payment confirmation into your mobile email, you also get to know what is the left balance, the balance in your account. So this is the kind of instant information, instant communications, what we are able to see. This was absent for a long time, for ages. During the past 2 decades, more so in the past 1 decade, the technology entry into finance field has been phenomenal. And this kind of magnitude may not repeat in the future, while technology will continue to play a fantastic role, a major role in finance field as well. These many disruptions, this kind of sea changes may not happen. As I said, the changes what finance has already seen include the digital payments. And as we stand today, we're discussing about the CBDCs, central bank digital currencies. And going by the claim what RBI and the Ministry of Finance and other financial experts are making, from 20,000 transactions a day today, within 6 months, within 3 months, in fact, within 3 months, government is expecting 10 lakh transactions a day. We're talking about just 3 months. We're in October, November, December. So by December end, government is expecting 10 lakh transactions a day. That is the kind of proliferation what we are seeing in the finance field because of technology. And ERPs, back then we never had core banking solution. The absence of CBS was the reason why you had to wait for 8 days to see your account updated, to wait for 10 days to see your money remitted abroad, received by the recipient. Those are not the days today. You send it within a second, it could be received. Therefore, personally, I think further technologies in finance are possible, will definitely add a lot more value, but may not be as path-breaking as the technologies were during the past 1 decade. So the further technologies in finance could be more towards procedures than involving major innovations. Then coming to project management, yes, on the project management, there is a scope for major innovations, in fact. That could come from something like the chain linkage connections, instant monitoring, then the employment or the usage of artificial intelligence. One of the startup what I'm mentoring and I'm proud to be part of, Minto AI, they are into this kind of thing. So the machine what Minto AI installs, the monitoring machine, smaller machine, which they install in a steel plant. We're talking about steel plant. Steel plant could cost something like 10,000 to 50,000 crores. Can study which part of the machine is operating suboptimally and therefore requires immediate attention. Those are the kind of innovations what we could see in project management and instant monitoring. And of course, it goes without saying, the benchmark technologies like blockchain. blockchain in the project management, linking whether the quality is cumulatively getting added or is it not, which can be easily tracked by the blockchain technology adoption. So these kind of technologies will be definitely emerging more in number, more in magnitude, and will add to the project management and will make the project management much, much simpler.
I feel Mintu, AI is absolutely lucky to have you as a mentor. Uh, Someone who understands technology so well and has a great control over and command over finance as well as management. I mean, as a mentor, having someone like you really is like they're really very lucky is what I can tell you. Like especially after listening to this response, I believe the kind of insights that they can actually get from you while they take feedback on their product. I would again request other folks that there is a possibility of taking your time and your consultation as a mentor. They should definitely reach out to you. Amazing, sir. So we'll move to the next question now. This segment is about news and politics. So how do you perceive the intersection of all of these domains of finance, economics, and politics? And what key political factors do you believe will influence the financial landscape in near future? I would love to hear that. I mean, because there's so much people are speculating about global economy, Indian economy right now in this current scenario. Like from economists like you, we would love to hear that.
But to start with, for sure, the governance factor in India has been positively improved. That is for sure. And it could be because of more of technology adoption, could be because of more of the social media transparency, all of these things, could be also because of the entrepreneurial spirit demanding, challenging to know many of the steps what were earlier unknown, where the application and the output or the result were only the concerned aspects for a person or would only be known, rest usually remains unknown. Politics will definitely impact economics, and economics do need finance. So these three are closely connected. Politics severely impact finance because of the interconnection. The intersection is emerging gradually, more in magnitude, but for the good. Now, let us say the direct benefit transfers, the e-governance, online applications, the Aadhaar system, and online waybills, online tax assessments, and government itself starting incubators, accelerators, offering pro bono training programs, connecting mentors like you and me to the startups, and persons like you, in spite of being a commercial entrepreneur, rendering so much of pro bono service to startups, helping them as much as you are helping your own venture. Many persons like me understanding the new age technologies and the way how youngsters are working. For sure, these all things are the good parts what we are seeing because of the intersection among politics, economics, and finance. Back then, we had a lot of political movements and political debates and many articles, books authored on the reservations. Today, the discussion is more about reservations for startups, reservations for MSMEs. It could be production lines, service lines, or opportunities, or provisions being created by the government in terms of office spaces or market initiative programs of sponsoring them to go to the places, marketplaces with the government expenditure. So these are the kind of things what we're talking versus few other things, yet other things what we discussed long back earlier. And the consultative process. Earlier, media used to shout. Today, along with the media, like brothers and sisters, the stakeholders are also involved in the consultative process, and whatever is possible, maybe 100% consultation isn't possible in democracy, but it is allowing consultative process, and at least the good parts with whatever balance they require, with whatever rigidity they have to continue, they are able to accommodate all of these multi-stakeholder beneficial aspects. That is something which is amazing, and we would not have thought of this kind of evolution development in the governance. Now, the present movement, the governance, and the awareness among the stakeholders is in the right direction. Barring few instances here and there, it is in the right direction. So the requirement can be best achieved by regulation only. Therefore, I believe the regulatory measures have to be up and on and continue. You adopt the technology whatever required, as you have been adopting and then doing it, and you have to have multiple categories and classifications so that the regulatory measures and the technology will go down to each of the stage or each of the kind of classified stakeholder who should be addressed with sector or stakeholder specific approach. Those are things what one should work on, which government I think is working on. Therefore, I would end again by repeating the word: politics do impact economics. Economics do need finance, and therefore politics, economics, and finance remain always interconnected, and the intersection has to be used for the good of all the stakeholders by the regulatory authorities using regulatory measures.
Great, Dr. Kishore. I very positively put the whole spectrum of policy, politics, finance, and economics together. I mean, this is amazing. Great. So now I'll actually tone it down a bit. Usually, I have this segment of humor so that our audience could see the face behind the face, the human side of the expert. So we have talked about your impressive career, and to lighten up the mood, would you like to share a humorous or maybe an unexpected anecdote from your journey that still brings a smile to your face when you reminisce about it? Would love to hear something from you.
Maybe, in fact, my journey didn't have much of humor, which are worthy enough of sharing, which brings smiles whenever I think of them. Way back, we were applying for internet connection. Those were the days where you have to apply for internet connection by applying on a application format, etc. And the sales coordinator would carry a format, and you have to make a photocopy of it and then apply it. So he gave the format, told you need to make 2 copies, 1 copy for yourself and 1 copy for me, and then make an application and then give it. Then we called our junior to get few photocopies, and we have a practice of telling our juniors that do not waste pages. So always get back-to-back photocopy. When we were requiring 2 applications, he got back-to-back photocopy, same application on same page. So how 2 persons would use it? So then we realized that unless instructions are clear, what is told with a force remains in the mind, and ultimately we are left with only one. We didn't get to know it immediately. We asked our guy, "Did you get 2 copies?" "Yes, sir." So he kept it there. After the sales coordinator left, when we asked for 2 copies, he gave 1 page. "Where are 2 copies, sir? Back to back." So how will 2 apply? So it wouldn't happen. So this is another small funny incident which I faced, and then sometimes when I think of it, I always laugh, because this is what we get to meet every day in the life, and we tell 2 copies, not to back.
Lovely, Dr. Kishore. Great. So finally, we are at the end of the discussion. There's one last question. I'll put it across to you. There is usually enigma kind of investigation that comes into everybody's life at some stage in some format. So I would put across one question on investigation to you now. So with your diverse skill set that you have, you are akin to an investigative scenario, and as an investigative expert in the world of finance. So can you dive us into a complex project or financial challenge that you have encountered and share how you crack down the case, or maybe offer your valuable insights for our audience?
I would say every project is complex. In fact, every project itself is very complex. Now, when it comes to the investigative aspect and then these projects, we have to be sure of planning, stage-wise achievements, stage-wise funding, milestone achievements, etc. Which are the key? Then not every project could be very successful, but making it happen is the key. That is the expertise or the ability of the entrepreneur or the person who is working on the project. Towards such kind of achievement, which would pave way for success, the proper due diligence is the key. My own experience, when you are starting something and choosing your team, when you're acquiring some entity, looking at the business, your due diligence should focus more on the person with whom you are traveling, the team which you are recruiting, the person who is selling the target company, more than the business of the target company. As a suitor, if you do a proper due diligence on the seller of the target company, the team which you are choosing for your business, I think your business has achieved 50% success automatically. Thereafter, whatever little efforts are there will make it 100% successful. And documentary approach is very critical for system building for any organization. It could be a behemoth organization like Walmart, L&T, or any organization, or it could be for a small one-person small business aspect. And system-driven approach and connected communication approach. These are very, very important. But let me tell you a small experience. I will not name because this is slightly confidential, but then I would like to share the business model because this is a fantastic opportunity for me to share with others. Now, there was a business venture where we were part of it. They succeeded with their model, convinced good number of friends and associates to become franchisees, and the franchisee license was given. The core competency, what was built by the company, was shared on a royalty basis with the franchisees, and the business was running relatively better, improving year after year, and much to the satisfaction of everyone. Then came some challenges in the ecosystem. Unhealthy competition from players who have deep pockets can kill these kind of smaller units with whatever subsidy is required. Why subsidy? It could be a freebie also. And in that amidst that kind of competition, we had to investigate, innovate, and evolve and face the competition in our possible manner. So what did we do, or what did the business do? Because I said it's a team effort. We devised a plan. We had a town hall meeting. The franchisee owners were taken into confidence, and they were taken on board as branch heads, and the franchisees were converted into branches and as own entities, own units of the company. In return for the transfer of their own entities as branches to the company, we have allotted them shares in the business. So your franchisees became your partners, shareholders and partners. As we made them partners, what did we achieve? We avoided capex. If only you have to start 50 branches, you would never have started, because that was a capex which was way beyond your reach by any measure. And we reduced the OPEX. Earlier, you have a lot of communication happening between you as one class and franchises as another class. Today, it's all partners among partners. So the OPEX got reduced, and the ownership quotient, the business contribution from the owners, from the units, enhanced very, very significantly. And because of this exercise of one business having some franchisee associates became a big business and had a lot of equity, which is shown by virtue of the owned units, which were earlier franchisee units, but now became own branch units. The entity, the company, became eligible for a good amount of debt. I'll not share what amount, because I told you it's quite confidential, but good amount of debt. And with this kind of own branch network, many owning partners, contributing partners with a cooperative spirit and eligibility to mobilize more equity, more debt, suddenly becoming a small behemoth organization, we could take on the competition very comfortably, although we were not having even a percent of the deep pocket strength the competitors had. And this was possible because of team spirit, and because of the structuring what we could do, and because of the transparent dialogue what we could have with the stakeholders who all are working with their personal or their entity level individual targets. But when they all were consolidated with a concerted efforts, the integrated approach made all the more difference. And market was in a shock to understand that a small unit which could die very easily could compete with the big names.
Great, sir. I can see, I mean, like the years of experience, the veteran you are in this domain, pretty much everything has a framework when you break it down. It's been a truly enlightening conversation, covering everything from business, entrepreneurship, health and wellness, technology, news, policy, and even like though you said there's no humor part to your work, but I really love the way you have put it across. So I think so that is it. I think I'll call it a wrap. And to our listeners, thank you for joining us on this episode of Seshadri's Talk Show. If you found today's discussion as engaging as we did, be sure to subscribe, leave a review, and comment. And stay tuned for more exciting conversations with remarkable individuals like Dr. Kishore. Until next time, thank you.
Seshadri's Talk Show. Seshadri's Talk Show.